We've got Mr. S.S. Mallikarjuna Rao, the Chairman, Managing Director and CEO of PNB, joining in to discuss the earnings. Thank you so much for joining in on ET Now. Let's discuss some of the highlights for Q3 FY22. What's driven this performance? NII growth at 7,803 crores has been a little bit lower on a year-on-year basis, but the overall asset quality has improved.
It is a good performance and the trajectory of growth has come. What is important for me is if you look at the credit growth year-on-year appears at 4%, but more importantly, if you look at quarter-on-quarter, it is 2.67%. So that means the trajectory will take us not for a credit growth not less than anything between 6 to 8% in the next 1 year. That is a very important achievement for us because amalgamation, COVID, and many factors we have gone through in the last 1.5 to 2 years. So now the trajectory has completely changed and there is a stability in credit growth in PNB. That is the biggest achievement.
Okay, and your NII, as I was discussing, has come in a little bit lower on a year-on-year basis, ditto with the PPOP. How do you see this going forward? Will we see a pickup?
Year-on-year, if you remember, NPA identification was not there until March 2021. An accumulated position of almost more than 9 months happened only in March 21. As such, the figures of NII at the end of March 20 are not very accurately comparable with 21 because even though we have identified pro forma NPA and made provision, but there was a recognition of interest as well, which was not reducing the interest income. That was one of the reasons. Now, moving forward, though there is a pressure on interest rates in the last 1.5 years because of high liquidity in the market where we were compelled to reduce lending rates, though the commensurate reduction in deposit rates did not take place, as a result, there was a pressure on net interest income, there was a pressure on net interest margin. However, if you look for the future, such a situation has already reduced. RBI has already taken measures in sucking the liquidity through VRRR, and bond prices also have firmed up. And in the days to come, we expect that interest rates will moderate in an upward trend to create this stabilization where high liquidity impact of pressure on low interest rates would not be there. As a result, I expect net interest margin and net interest income to improve well in the next year, not only for Punjab National Bank, for the banking industry as well.
Good morning, this is Nentara. So if I look at the bottom line, the profit after tax has seen growth. Take us through how provisions are trending. This is being talked now of the return of the golden age for banking with the NPAs behind the system and all of that.
Currently, we don't have any stress sector. We don't have bigger accounts coming up to become NPA, except one account you're seeing in the larger perspective of legal domain. There is an issue related to future retail, which is under restructuring, appears under standard. It is not a very huge amount. And that is the only one. What kind of course it will take place, we'll have to wait and see. Otherwise, we don't have any bigger accounts to become NPA in the future. The concerns related to MSME continue for some more time, but then that also the trend will get reversed during the year 22-23. So provision, if you look at what we have done by December 2021, we have increased a little amount of provision in order to strengthen the balance sheet. Otherwise, even our profit would have been a little higher. But intentionally, we have increased provision in standard as well as in NPA advances so that our credit deposit provision coverage ratio, excluding TWO, has increased by 200 basis points to create a strength to the balance sheet. So I don't see any impact of higher provisions in the years to come because we don't have a stake to become NPA from the corporate profile.
Your advances have grown marginally. So can you share the breakup here and, what's happening on ground?
All the sectors. For example, if you analyze the retail growth has been 7.7%, housing loan has grown by 7%, vehicle loan has grown by 23%, and even corporate has grown. But if you look at the composition of RAM, from 51%, it has come to 54% now. So there is a growth. Corporate also has seen growth, but because of interest rate war The problem is the lending was not remaining for a longer duration of time, even though we have given for a longer duration of time. Depending upon the price available at other competitors at a lower level, the amount gets shifted. This phenomena will get reduced. If you remember last time when I was talking to you, we already created a pipeline of credits, sanctions given where disbursement is to take place. That strength is still continuing. As a result, the credit growth will be between 6 to 8% in the next few quarters, year on year.
So can we say the focus is now going to be on growth?
See, if you look at, first of all, PNB is one of the largest banks. It has got a business of more than 18.56 crore of business. So if we cannot conclude or we cannot plan to say that only in one segment we will grow. We have a broad-based growth, whether it is a corporate segment, retail segment, MSME segment, or agriculture segment. Potential in the country currently and the necessity in the country currently for the economy, the growth is required to be achieved by all of us in agriculture and MSME with greater focus that is applicable for the economy. As far as PNB is concerned, we are broad-based. We would like to grow in every segment.
Right. Also wanted to understand what's happening with recoveries as well as write-backs, because the last time we spoke, you sounded pretty bullish on recoveries from various sectors.
No, recoveries have been good. In fact, if you have seen the control in our asset quality has been much better in the quarter ended December. The slippages were only 3,800. If you compare with slippage in March, 25,000 crores and above, and in June, it was almost 8,800 crores. And in September, it was 6,700 crores. And by coming to December, it is around 3,800 crores. So on one side, control on asset quality, improvement in collections has brought reduction in the slippages. Simultaneously, if you look at the recoveries and reduction in NPA, you will observe that the recovery and reduction together has outpaced the slippage, fresh slippage. As a result, our gross NPA in absolute terms has come down. In percentage terms, it has come down. Net NPA as well in gross and percentage, it has come down. We still are bullish on recoveries, though there are not very bigger accounts in NCLT to provide a large amount of recovery, but there are cases. So I have indicated about 6,000 to 7,000 crores coming up from recoveries, other than regular recovery around 3,000 crores per quarter. So I stick to this estimate because in December we have achieved the same, and in March as well, our recoveries would be definitely better. There is an element of around 2,000 crores we can expect from NCLT recovery, comprising various accounts before March.
And finally, before we let you go, growth has certainly made a comeback, and the budget is going to be a great opportunity for the government to give a further impetus. In your view, what should the government be looking at as major thrust when it comes to their growth agenda?
Job creation is one of the very important factors, and job creation doesn't happen in isolation. It goes in tandem with the industrial growth. Last 2 years, if you remember, 2019 October, the government started by bringing the tax reforms for all the new industries coming up after 1/10/2019. However, we have not seen much. During the COVID time, many of the industries have gone for deleveraging their balance sheet, deleveraging their liability, and some of them have gone to the market for raising the capital. As a result, their credit outstanding or what they have taken from the banks have got reduced. Further, through IBC, many of the units have been acquired by various companies. As a result, they have got additional capacity utilization. So without larger investment, with little amount of investment, they have improved upon their capacity utilization. So this correction has taken place in the last 1.5 years. Now we are seeing green shoots in terms of fresh investment by the industry. That is where we look for the future for improvement in industry mid-segment particularly, and ancillary industry when the big industries come up. That is ancillary industry in MSME segment. That is an area where job creation can come. So in the budget, what I expect is there can be some conscious effort to create impetus for job creation and industrialization. Otherwise, all other targets, if you recall the last budget, in terms of stack what they've declared for infrastructure, whether it's an aviation industry or ports or even road segment, they're all on track. Even road segment is on track. We have seen many of the projects coming up. So in the current budget, it is just a matter of implementing whatever decisions they have taken, whatever proposals they made in the last budget, besides conscious efforts to create jobs and conscious efforts to ensure more effective and aggressive industrialization in the country.
Okay, Mr. Rao, we're going to leave it at that. Thank you so much for joining us live today on the market and decoding the earnings and the quarter that's gone by and some glimpse of what we can expect going forward too.